Hi everybody, welcome back to the Daily Hunt. I'm Henry, and this will be slightly different where you won't be able to see me, but you're going to be seeing my screen. I am a trader, investor, and I primarily focus on swing trading. So most of the things that you're going to be seeing is from a perspective of a swing trader. I'm currently in the US Investing Championship. I'm one of the top 15 traders there. So I know a thing or two about investing and trading, especially in these volatile and tricky markets. What I want to cover today is my overall market analysis and insights. So we'll be talking about the stock market, what I'm seeing overall in the S&P, NASDAQ, Russell 2000, the VIX, and a few other key factors. I'm also going to be talking about the crypto market, what I'm seeing in Bitcoin and Ethereum, but also altcoins. I'm also going to be covering gold, the dollar, and some other parts of commodities to show you guys where I'm putting my money right now and why I'm positioning myself in particular trades. So right at the end, I will be talking about my recent trades, my most recent trades in crypto, and the key sectors and markets that I'm positioning myself in the stock market. I primarily trade stocks. So even if I use commodities, I'm trading stocks within that particular sector, for example, gold and so on. Without wasting any time, I want to go straight into analyzing this heat map. And it's very telling for me because although we've seen the S&P 500 and NASDAQ reach new highs, what we're seeing is we're seeing cash flowing or capital flowing into larger caps again, primarily Google, Apple, AVGO. And then if you look down here on retail, you can see Walmart, cost cutters, Home Depot, Amazon. These are all what I would call kind of budget companies that are defensive. So essentially, no one's going to stop going to Walmart and Costco during a bad economic period. They're not going to stop going to Home Depot to do home repairs. And they sure won't stop using Amazon, which is almost essential right now in a modern day life. And then we see here green week last week for health tech and the health services sector. So you're seeing health services, health tech, you're seeing communication as well. Again, you're looking at essential services and products that the market needs. They are doing pretty well here. Then we have PG. These are consumer non-durables doing well, and then consumer durables such as Tesla. And from our portfolio, we've got Tesla there in our portfolio. We have a Rivian as well. And then we also have a number of other stocks from this list, which we are holding that are doing well at the moment in health tech and health services. So we're seeing a lot of positive movement, but primarily into these sectors and large caps. So that's why the market's holding up quite well. Equal weighted, it's consolidating, and we'll be covering that as well. But for me personally, it's a cautious environment. We've also seen gold do pretty well. So if we go to the gold, right? So if we go into gold, what you're going to see is you will see huge momentum pushing up higher. In my previous videos, I mentioned that the 3.3K level, 3.4K level will be key here. And you can go and watch those previous videos and see that it was the key pivot point, the key moment to buy in to gold. And then since then, we've seen a huge upside momentum with this news on inflation, news potentially that the Fed will, or the rumor that the Fed will reduce interest rates and there's some issues in the jobs market. And we've seen some major issues last week as well in the job market, so that's kind of supported. But gold has been doing well as well. Again, defensive, moving really well. Now, the first thing I want to cover, personally, I always look at the S&P 500. I'm primarily invested in stocks, so I always look at the S&P 500, NASDAQ Russell, and then I'll move on to other sectors. When we look at the S&P 500, this is what we're seeing. I have some drawings here. We have a channel rising, again, mentioned in my previous videos. The last 2 weeks that I haven't posted because I've been in the Middle East and I'm currently in the Philippines, we're seeing a consolidation in price. So we're seeing that box develop. As you can see here, this box developing. We've seen a break below the channel here, and we've seen a break back up and potentially a break above the consolidation zone and a new high. We've actually got a new high on Friday, which then led to a sell-off. What's happening here is I think there's a lot of indecision in the market. We're seeing some sellers, some buyers, a lot of buy the dippers here coming in. I don't know exactly what the volumes are, but for me personally, this is a 50-50 zone, and I'm being very cautious about what I'm buying. I'm not buying absolutely everything here. I'll focus on some particular sectors, which I'll be mentioning later on in the video. So it's looking, in my opinion, it's looking like we're seeing a reset on the RSI and potentially a decision of this week. I think this coincides with the revisions in the job numbers, and also it coincides with the CPI data coming out on the 11th. So we have non-farm payrolls, annual revisions here, and then we have the CPI data, inflation data coming out on the 11th of September. And I think that's when we probably find out whether the Fed will reduce interest rates and also by how much. We kind of predict how much they'll reduce interest rates by. Personally, like I said, I'm buying some particular stocks in certain sectors. For example, Chinese stocks have been doing really well, and in pre-market they're performing pretty well right now. As we're speaking it on in Monday morning. If we're looking at the S&P in this situation, we have to be cautious. And my key trigger is a break above the 60 level on the RSI. We're going bullish again, green market, momentum kicking in, and we have plenty of room to rise up to 6.7K. And that's been my zone since January of last year. Sorry, January this year, December last year. That's the situation with the S&P. In terms of predictions, I think we're probably looking like we're going to go long to 6.6K. NASDAQ, we have a head and shoulders, which I think could be one of the main reasons why we could sell off. So this is playing more towards the bearish scenario in the markets, the head and shoulders being developed. And if this momentum doesn't kick in and we don't see the RSI continue this rise, then we probably come back down and break the neckline. The neckline for me will be that zone that I will probably have to sell and go short into the market. Now, this neckline zone here, 23.3K, and with the S&P 500, currently it's around this level of 6.3K. Could probably go short a little bit higher here, around 6.4K and a bit. The Russell, staying on the upper level of the channel, and for obvious reasons, interest rates will help small caps and growth businesses grow, and give them opportunity to find cheap capital and continue trying to grow in their particular sectors. So overall, the Russell is probably looking like a better opportunity than the NASDAQ. So although NASDAQ is technology driven and has been the best performer in the last 3 years, I personally think now we could be entering a phase where the Russell 2000 gives us a huge opportunity. And then when we look at the weekly, we're seeing there's upside potential here to go back to all-time highs, which it hasn't done, and on the monthly as well. When we're looking at the NASDAQ on the monthly, we're getting some bearish divergence. It looks overbought, and we have to be very, very cautious that we haven't entered an AI bubble, which is about to burst. So for me, this overextension here might lead to a bit of a sell-off and then a rise up. So we just have to be cautious, or a consolidation phase, and not be too eager going into the decision on the 17th of September. I'm buying very, very cautiously, and I'm making sure I'm buying good momentum plays, good swing trades that will go straight away into profit, and then we can maneuver in tricky situations if the market starts dumping. Again, here on the S&P, looking bearish because of the bearish divergence, but we've also seen the RSI reach these really high levels of 90 while the market maintains a dull market on the monthly here, while the market continues to be a dull market, as you can see here. Now, my trigger the last few months has always been the VIX. So monitoring the VIX has been very important for me. And the key levels are these levels I've mentioned previously in the videos that I've posted. 14, 15, sub 15, we are very, very bullish. Over 16, we're looking bearish, and that's been the general case. So anytime we've seen a dip has been over 16, and anytime we've come back down to around 15, that's been kind of the new top in this trending market, in this dull market. It's been kind of the levels that I've seen as new tops. If we go sub 14, then we have a huge upside potential by investing in riskier plays, because I think the market will be in high greed and low fear. So personally, for me, it looks like there's going to be another spike happening, because we're seeing here in pre-market this opening up a little bit higher. But we have to wait and see. For me, if it crosses 20, we have to be worried. But if it crosses 20, then we get a dump in the market, maybe 5 to 10%. And then what will happen is we will find new opportunities. And if we look at some of the leaders of this period, like Palantir, Robinhood, etc., they've sold off. So capital is flowing into alternative investments, like I mentioned at the start of the video: health tech, health services, consumer durables, consumer non-durables, and so on, and as well as some large caps. Robinhood as well, recovering here a little bit, and we've had some other leaders like Nvidia, which seems fairly weak. And I think semiconductors haven't been doing that well the last 2 weeks. So yes, the market's moving up, but we're seeing some of the leaders start to slow down and show weakness. Okay, so caution, buy in cautiously pre-Fed decision. Obviously, you have to position yourself before the Fed decision, just in case it moves significantly within the day and you won't be able to trade it. But always trade with caution, always manage risk appropriately. Now, in terms of my trades and what I've traded during this period in the stock market, one of my top trades right now has been IQ. This is seen as the new Netflix, or the Netflix of Asia, and it's performing really well since we entered around $1.99, moving really well. We're around $2.73, so $2.73, again around 37% in the last few weeks. Alibaba has been doing well. We've bought it a few times. We ended up buying here, selling off, and now buying again around this level before this spike up. And for me, it looks honestly looks like we can go all the way up to 48.50, and then we can start a new monthly trend where we become overbought, and that could take us maybe to 160, 170. That's kind of my target if we're able to hit the 148, 150 level. Rivian, it's been very good. Huge consolidation here, as you can see. Long-term consolidation on the monthly. It's coming off a base. I think the business is doing fairly well, although we've had some poor earnings recently. But overall, it's doing pretty well with revenues, and it's been doing, it's been moving in the right direction as a business. We've entered around this level, around 13, and personally, I expect that even if we get a dip, it's a temporary dip before we move up higher. On the monthly, it's looking on the weekly, it's looking pretty good as well. There's huge upside potential here, and I quite like it. Baidu in the China play as well. As you can see here, pre-market 108, closed at 101 Friday. We bought around this 93 level, so we're doing really well here. The momentum's kicked in. Again, like I mentioned earlier in the video, I'm only buying opportunities where I feel there's key momentum coming in, and I can secure some profits on the way up, and we can then, in a situation where the Fed brings about a surprise and the market dumps, we're at least not in a vulnerable position. Tesla has been consolidating. We need Tesla to break this 350-355 level. Once it breaks there, I think it's almost a guarantee that we move up to around 400, 380 to 400. I see around 385, 390, maybe 400. I don't see 415 just yet. So we're looking okay here. It's just been up and down, up and down. We've had to trade it 2-3 times to make sure that we don't lose any money on this trade. And I recently rebought around this level. That's about it. There's a few other ones that are up and down, a little bit up, a little bit down, some in profit, some in small losses. We'll manage those. The big winners will obviously compensate for any losses and give us additional profit. So that's stocks. Stocks have been covered. We've covered stocks completely. What I want to cover now, and with stocks, I want to point out Chinese theme. We've bought some of the leaders right now are the ones where cash is flowing into. Now I want to move into crypto. So I want to talk about Bitcoin and the situation here. So I've made some annotations here, some notes. And for me, the real bullish momentum will come in around 100. I would like to see the market move down to 100 from here and then build momentum so we can see this bullish move in end of September, early October. But there are also two scenarios. So this would be the ideal scenario where we will get momentum from position traders, swing traders, day traders. Everybody will love the 100 zone. I think it'll be a nice psychological zone to buy up in, with the idea that it goes to 150. So the other scenario that I'm running through here, and there's a reason why, because we're seeing this consolidation and higher lows, and then maybe we can break up here for a higher high, is the breakout above this 112.5 level. And the risk here is that we move up higher and we get a head and shoulder pattern. So we have the left shoulder, the head, the right shoulder. That's the risk. And for me, it's a risk worth taking. So if we enter around this area, which I probably will be, I'm not yet in a trade because I think I'd like to see this zone cleared. Okay, this 1112 to 113.5 level cleared. If I enter here, I'm happy to take that risk because I think I'll have a buffer even if the market sells off. So we could get a market where we see head and shoulder pattern develop, resistance around this level, a sell-off, and then the real move comes from 100k, maybe even 108 again for a double bottom, and then we move up higher. So that's something that I'm working with. Personally, I'm keen on taking a trade around this level, and I do see some upside potential here for around 7% gain, maybe as high as 10% to 123. And then obviously, if we reject here, we would have to sell off, take a bit of profit, and then look for another support level that we can buy into. That's Bitcoin. On the monthly, it's overextended, and that's the reason why I think it needs a dip to around the 10 EMA on the monthly and a weekly retest. Ethereum, for me, it's consolidating. We have a 50-50 zone here. It's basically sub 4.2. We are short over 4.4, 4.5. We are long. And 4.5 is the level that I sold my most recent buy up. So I bought around 3.7. I sold around 4.5. So if I buy around 4.5, I wouldn't mind it. I think I'll probably buy a little bit better than that. If some momentum kicks in today and the next few days, we can buy some and then start scaling into that level of 4.5 and then higher. So Ethereum is looking like a consolidation. It could also develop into a head and shoulders. We have left shoulder, head, right shoulder potentially. That's something to also watch out for. In terms of what I've bought for crypto, I've bought ENA, and we bought it around 770, 71. It was a nice buy. I felt like there was a nice breakout here. It was showing signs that it could potentially be a leader in the market if it moves up higher. That's exactly what it's done. There's been some positive news as well coming out. Something to do with stablecoin X securing around 530 million investment, and so on and so on. So there's news supporting this move. But from a technical perspective, we've had a support a number of times, breakout above this trend line. That was a key pivot point for me. And then now we have momentum kicking in, going into CPI data and other news in the next 2 weeks, or economic data in the next 2 weeks. So there you go. I like it, and it's moving well. Decentraland, Mana, MA, NA, also very similar. Nice consolidation, coming off a base, and we have the breakout above the wedge, so the trend line, descending trend line, and that was a key moment for me. The only slight difference here is on the weekly, Mana is fully consolidated. On the weekly, ENA has already developed a trend. So on the weekly, we've already had a trend develop, a dip, and we're buying the dip on the weekly. So slight difference here where ENA has been a leader and has moved really well prior to this, and that's what gives me more support with ENA for it to move up to these higher levels. But both great setups, with this being a little bit tighter on the weekly, and it's really looking like an alt season is on the way or starting to show signs. Maybe we don't get it, but I'm going to be trading with the idea that we will be getting it in the next 2 months, So my position sizing is going to be scaling in. It's going to be kind of being more cautious until I see real momentum kicking in to alts. EIGEN on the weekly, nice consolidation here. And on the daily, we took the trade around this 1.36, 1.37 level. And we're seeing the early stages of this moving up higher and plenty of space to grow into the RSI and break through certain levels, as well as plenty of space on the weekly to grow and go on a significant run. This has been also performing really well compared to the rest of the market. As you can see here, EIGEN 4.2 and 5.9% today compared to 0.6, 0.1 Ethereum and Bitcoin, and then around 1 to 2%, maybe 3% for other alts. So they're outpacing the growth of other alts, and this is the way that I trade. I basically look at relative strength of an asset, crypto or stock or whatever I happen to be trading compared to the broader market. And these are performing really, really well. That's it. There are other opportunities like Dogecoin, XRP I'm looking at as a buy here. I'm also looking at AVAX, which is looking like a nice squeeze on the weekly and potential breakout and buy. And then the rest of the list here as well is a potential buy for me with caution, just because there could be some high volatility in the next few weeks. Okay, that's crypto done, and we will now move to the final section. So we covered gold a little bit earlier, but I want to explain here what I'm seeing. So we've had this move. The target I mentioned in the previous video was 3.7. Now, I'm not sure whether we'll get that straight away. I think we probably need a mini dip here now with this overextension. If the news is negative on the economy and investors become fearful, well, then we might get a sell-off in the rest of the market, and then this moves up to 3.7K straight away. But if not, money might flow back into stocks. We get a dip to around 2.5, so 3.5%, and that could be another good buy zone for gold. But gold has been performing really well, around 1 to 2% a day, and that's a really, really good performance for gold here. And it has been one of the top performing assets in the last 2 to 3 years, as you can see here. Just keeps on moving up higher, consolidates and moves up higher. Silver moving well with gold as well. Silver now reaching these higher levels. Silver was one of those investments that I'd been watching for a long time, but felt like it wasn't moving anywhere. And then it broke out above 23, and then since then we've seen consolidations and then continuations in the trend. The dollar is very important. The main thing that I'm focusing on is, will it hold this support level, or will it break here? So, sorry, will it break this support level, or will it break the wedge, the descending trend line? If it breaks this one, we then get a move to, which basically brings the dollar up, and I think the rest of the market sells off. If we go low on the dollar, so under this level, we then get a bullish market. So the dollar is also consolidating here, so I think it's due a breakout at some point in the next few days and weeks. The Chinese market, Hang Seng index doing pretty well. I showed you Alibaba, Baidu, etc. And I think that's where I'll probably leave it for today. There's nothing else I can add here other than keep an eye out on the CPI data coming out on Thursday. Very, very important. Buy cautiously before then. I think that could be a key moment where if the data comes out right and it's interpreted well by traders and investors, we could see the market start the trend now for the move up higher. And then my theory is if we get the move up higher now, we probably get a sell-off with the Fed decision. What I'd like to see is maybe further consolidation and then the move up higher with the Fed decision, which is the most important news right now. But that's it for me. I will say this, go and subscribe to the channel. Make sure you hit the notification bell as well, just so you can get notified for every video that I post every single day. Go and watch the previous video as well if you want to see my analysis for gold and Bitcoin and Ethereum. There's those I was mentioning as sell-offs, as well as the S&P 500, where I was saying that it could consolidate or come back down a little bit. It's holding up really nicely. So there are some things I mentioned in those previous videos. Go and watch those. Go and follow me on Instagram, X, and TikTok. Short form videos and other content being posted there. And finally, go and join Discord for free. I share my watch list there, my market analysis, pretty much every day, every other day. And I'm willing to also provide you guys with other insights and analysis as and when the news comes out, rather than you guys waiting for the end of the day or the following day to see it on video. That's it. All the links are below in the description of this video. And that's it from me. I'll see you tomorrow.